Hey, good morning folks. My name is John Needham. I'll be your host for today's edition of the Daniel Code, which is for Thursday the 2nd of April. Time seems to be going very fast, doesn't it? Today we've started coverage of GLD, the gold tracking stock, which a lot of our members have been asking for. A lot of our members trade GLD or some of them trade CBOT, other forms of physical gold. And they've had great difficulty converting the prices from the COMEX charts that we produce into GLD. So we've started today with coverage of GLD, and the chart for GLD for the next fortnight can be found on the landing page of the Danielcode website at www.thedanielcode.com. In addition to that, the charts for this particular video are also available at the Danielcode website or to the right of this video on YouTube. So please get the charts that go with this presentation, print them out so you'll be able to follow along as I take you through gold, GLD today, and some commodities that have been of interest lately. The first thing with GLD is that it is a tracking stock. Stocks tend not to be as accurate on the Danielcode numbers as futures or the index. Basically, the index is the most accurate, followed by futures, then stocks. This particular one, of course, being a stock, trades RTH floor hours, so there's a lot of price action that goes on in the gold market, which is one of the few genuine 24-hour markets that are not reflected in this stock price except on the opening gap. So I want you to just look carefully at this, because we have a constructional problem that I want to make sure you understand, and that is that the T3 signals, as you know, need to be elected. That is, they need to take out the previous day's high or low depending on the signal. With a market like GLD that's very gappy, we need to make some adjustments to make sure we're finding the true high and the true low, not the highs and lows of the bars that are on the chart. So we'll go to the charts now for the GLD and commodities video of 2nd of April, and the first one, chart 1, is just simply the GLD Street Tracks Gold Shares, which is the GLD tracking stock. You can see on that chart number 1, which is the daily chart, that a lot of these bars have a fluorescent green line underneath them. That's something that Genesis, the software I use, can create, and it highlights the gaps that are being left by these moves that don't cover the 24-hour markets. I've highlighted some more of those for you with a blue oval, so focus your attention on those. Just move on then, when you've seen that, to chart number 2. And the point to remember here is we have a blow up of the previous chart, and we're looking at 2 bars in particular, Tuesday the 10th of March and Thursday the 12th of March. You can find those on your chart. Where the high of the stock is below the close of the previous day, then the market had to move all the way from the previous day's close to get there, to make that high for the bar. So we've got to allow for that movement. So we can say that when the high of the day is below the close of the previous day, then the true high is in fact the close of the previous day. So we look at Tuesday, 10th of March, you'll see that we have that green bar. All of that price action in there has to be represented, and because the high of Tuesday is below the close of Monday, Monday's close at 90.57 is in fact the true high for Tuesday. On Thursday I've shown you just the opposite. There's an up bar there where the low of the bar of Thursday is above the close of the previous day. Naturally, the market had to move from the close of the previous day to make the open and the daily low, which is well above it. So the true low for Thursday is in fact Wednesday's close at 89.22. So please be very careful with that, because I suspect with these GLD charts we're going to have a lot of T3 signals that you're going to think are elected, and they're not. They must take out the true high or the true low to be elected. Of course, The TO3 signals from COMEX Gold, Silver and Huey are the signals you use for GLD. The tracking stock will follow the futures market. So if you have a buy in any one of Huey, COMEX Gold or Silver from my TO3 entries, then you can execute those trades in GLD. That's the purpose of providing these charts for you. So they'll be available to the public, in fact, for 2 weeks, and thereafter they'll go into members' charts. Moving on to chart 3, we're just looking at a couple of TO3 trades that have happened during the week and how you could have traded them. Chart 3 is a week chart. We had a TO3 buy signal for Monday. You can see that it made an intraday turn there around that black line at 505.40. The high of Monday was 516, so you could have bought that on Tuesday at 1 or 2 ticks above Monday's high. That's a fairly simple trade for you. Nothing in these signals tells us where the trade is going to go. There are no targets. I know there are people who believe they can provide targets. I have found them very random. We have no foreknowledge, so we overcome that by using our protocols of moving our stops to protect profits. So always be aware of that. We don't know where these moves are going to go to. Some of them will be massive moves, some of them will be minnows. This was a very nice move just on the daily bar. The next chart, chart number 4, is soybeans. I'm showing you the same thing. We had a lovely TO3 sell signal in beans right on the high, 23rd of March. We had the trade all the way down to the Danielcode retracement at 896.40, where we got a buy signal on March the 30th. You could have bought that quite simply at 924 plus 1 or 2 ticks, and it's up at 959 or so now, so there's another nice trade there. Chart number 5 is that if you want to anticipate the daily entries on the TO3 signals, you can. We do that, and I will use a 240 minute or a 720 minute chart. I don't actually go below 240 minutes. You can trade 5-minute charts if you want to, 10-minute charts if you want to. You'll certainly get in a lot earlier, but you'll also get a lot more false signals. I have found that it is not necessary to go below 240 minutes on commodities that we trade, or on Forex for that matter, although you do need much faster charts to trade equities. Just looking at this, you can see that I'm repeating what I showed you in a previous video. This is the same soybeans chart, and we have the red rectangle around all of the bars that showed a positive cross on the fast stochastic. For these minute charts we use the fast stochastic. In this case I've shown you both of them. But if you look at the fast stochastic, you can see 1, 2, 3, 4 bars into the low that were positive crosses on the stochastic, but they were not elected. The market did not trade above those bars. I then put the final setup bar for you in a blue rectangle, so you can see that that's still on a positive cross on the stochastic, but that's the bar, the first bar that has a positive cross that gets elected. That is that the market trades above the high of that bar at 909.40, and that's where you buy it at 909.40 plus 1 or 2 ticks with your stop under the swing low. So you can see that just using a 240 minute chart you could have got into that TO3 trade there at 909.40, and on the daily signal we got into it at 924, so there's a very considerable difference. Good luck with your trading. Remember to move your stops, and we welcome you to the Danielcode. There are articles, videos, lots of information there for you if you're interested in the great fun of trading.
The day the music died, I started singing bye bye Miss American Pie. Drove my Chevy to the levee, but the levee was dry. Them good old boys were drinking whiskey and rye and singing, this'll be the day that I die. This'll be the day that I